All right, folks, buckle up because 2025 is about to bring some of the biggest mortgage rule changes and some of the most aggressive rule changes we've ever seen. Some of these are great and others, honestly, a little bit ridiculous. Today, we're breaking down all 5 changes, the risks, the benefits, and my 2 cents on whether they're actually going to fix anything or make more problems. Hey everyone, Myles Nowik here from the Nowik Mortgage Team, powered by Indy Mortgage. Welcome back to the channel where we're tackling all things mortgage, the good, the bad, and the downright confusing. Today, we're talking about 5 major rule changes that came in the latter half of 2024 and that are coming in through the early part of 2025. Let's see which ones of these are going to help you and which ones might leave you shaking your head. First off, the one we've all heard of, the increase on insurable mortgage limits. As of December 15th of 2024, the maximum home price eligible for mortgage insurance went from $1 million to $1.5 million. So if you're house shopping in places like Toronto or Vancouver, this could be great news for you. All in all, this one's a bit of a mixed bag. It's fantastic for buyers in big cities, but to be honest, in smaller markets like, Kelowna, Nanaimo, any of the smaller locations, it's not going to have a huge impact. It's not going to do much. Next, we're going to touch on the other part of that December 15th announcement. 30-year amortizations are back for first-time homebuyers or people buying a newly built home. This sounds great, but at the end of the day, it's kind of like kicking that debt can further down the road. It might make your mortgage easier now, but it doesn't solve the actual supply problem, nor does it solve the housing cost problem we have right now. What I do think could be caused by this, the benefits are obvious. It's going to give people smaller payments, making their house more affordable, hopefully allowing them to save up more money for retirement savings and all those other different things. But what I see on this is for new construction builds, longer amortizations for buyers makes it more accessible to buyers. Hopefully, this could spur up a lot more new construction. We can hope it would at least. We haven't really seen any signs that new construction is going to increase, but if it does, that's going to create construction jobs and economic growth and put more inventory into the amount of real estate that's available, allowing people to have access to more houses, hopefully driving prices down. All in all, with these new rules, it's a start, but let's face it, we're still dancing around the real issue. We need more houses, not just longer mortgages. And honestly, wouldn't building more homes also create jobs and lower unemployment? Just kind of a thought. Now, another thing that came out in the latter half of 2024 is simplified lender switches at renewal. Okay, this one's actually pretty cool. Borrowers with uninsured mortgages can now switch lenders at renewal without redoing that stress test. If your loan amount and amortization do not change, you're in a really good position and you're kind of good to go to shop the market and look at different lender options. The benefits of this, well, this levels the playing field, making lenders compete for your business. This could mean better rates, better mortgages, and better options for you when you come up for renewal. And on the flip side, the risks, well, honestly, I can't rightfully think of any. It's just a smart move. At first, I was honestly a bit skeptical about it, but now I'm all in on it. With tons of mortgages coming up for renewal in 2025, this could save people thousands of dollars by forcing the lenders to sharpen those pencils and offer better deals. So fingers crossed on this one, and hopefully lenders start competing pretty aggressively. If you did want more information on the upcoming potential mortgage wars where the lenders really compete for your renewal business, I did a video on that earlier. I'll put a link down in the description and you can also click right here. Now, this next one's coming up January 15th of this year, so pretty quick. And it's probably my favorite. Insured refinancing for the purpose of building a secondary suite. Homeowners can refinance their home up to 90% loan to value on an insured mortgage with a 30-year amortization for the purpose of building a secondary suite in their house. Therefore, alleviating payment shock if the renewal comes up. Let's say you come up for renewal and the payment is just too high and you're thinking, oh no, I can't afford it. I have to sell my house. Well, maybe if you have the ability in the home you're in, you utilize this program, you refinance, you extend your amortization back to 30 years or further to 30 years if you're less than that, and you put that secondary suite in, allowing you to utilize that rental income and cash flow to decrease your mortgage payment. Or maybe you utilize that to build up some wealth. The benefits of this is really a win-win. Homeowners can create rental units, reducing their mortgage costs or building up wealth, and it helps the supply in the rental market, hopefully putting some less pressure on those tenants and people looking to rent. When it comes to risks, It's minimal. One of the big things that I look at with this is, are you okay with having tenants? That's the big question. If you're not okay with sharing your space, if you really don't want people near you, this might not be the program for you. Honestly, I personally love this one. It's a chance to build wealth, lower costs, and boost the rental pool. Plus, for anyone struggling with payments, as mentioned, adding a suite could be the difference between keeping your home and having to sell. There's just one request. Government, if you're listening, please don't mess this one up. Please. Now, the next one is scheduled for Q1 of 2025 or quarter one. And this one is the one that people aren't too stoked on. OSFI is cracking down with a loan to income limit, or an LTI ratio. Mortgages above 4.5 times your income could be restricted at a lender level. That means the lender is only going to have a certain portion of their book that can go over that 4.5 times LTI ratio. That means if you make $100,000 a year, you can only borrow $450,000. Now, once again, I'm not going to get too into this one because I don't want to start screaming on camera and getting red in the face, but I did do a video that dives into this a little bit deeper. And once again, I'll make sure to put a link in the description, and you can also click right here if you want to access that one. So there you have it. 5 major mortgage rule changes that came in the latter half of 2024 and that are going to be going through 2025. Are they going to fix our housing crisis? Maybe, but honestly, probably not. Are they going to cause some new problems? Probably. Usually when rule changes come out, they always do. But here's the deal. Only time's going to tell us how these are going to affect the market and how they're going to roll out. I just hope the powers that be are watching closely and making sure these changes actually help people and don't make things worse. As mentioned, a lot of these, it feels like they're just kicking the can down the road. They're not actually fixing the problems. They're just putting a Band-Aid over a wound that actually needs stitches or surgery. So hopefully these changes can ease up some pressure for buyers or homeowners or even renters. And hopefully the government can watch these and say, okay, how do we develop these to make it actually solve and fix problems? I don't think any of these are truly a fix. I think they really are just Band-Aids on a wound, but it's a start. And honestly, the only one I don't like is that stupid LTI ratio. Hate that stupid thing. Sorry. Don't mean to get mad. As always, don't forget to like, share, and subscribe if you got value out of this video, and so you don't miss the next one. Once again, I'm Myles Nowik. We'll catch you on the next one.